On this episode, we talk to Patrick Aylmer from Fox Funding. We talk about what Fox does, what the development market looks like, and why they don't use valuations, and much, much more. Now, time to spend 30 minutes in finance.
Hello, everybody. My name is Patrick Aylmer. I'm the founder and managing director of Fox Funding, and we are a bridge and development lender.
Perfect. Thanks so much for coming on, Patrick. Really appreciate your time. And just again, for everybody listening, are you able just to give us a little bit of background onto how you actually got into the industry?
Yeah, sure. I previously had a career in finance, largely with large FTSE 100 companies with NatWest, BAT, Ernst & Young, and so on. And there came a point in my career where I just fancied doing something smaller and more entrepreneurial. And so I teamed up with Fox, which in those days was just a family office. And we then moved into property lending. I have to admit, having made that change in gear, it has been quite a relief to find that the skills that I learned in big companies seem to work equally well in a smaller environment.
Well, that's good. And what were you doing in the larger companies?
I was an M&A specialist, so mergers and acquisitions. So I'd sort of go around the UK and indeed globally, buying and selling businesses in order to try and extract the kind of synergies that you can get from global consolidation.
Okay, so I guess it does cross over pretty nicely in terms of you really get to dig into the meats and bones of sort of businesses, and obviously the clients you're going to be working with, maybe probably to a smaller scale, I would imagine now. And obviously that shift into Fox, was that something that you just sort of got bored of doing the M&A stuff, or was there something that gave you that little push?
Well, I think it's always exciting to turn over a new chapter, and it is true to say that there are a number of sort of common skill sets between what I was doing previously and what's required to run a bridge and development lending business. So in particular, the contracts, which are very important to both. But then there are other things like going out and actually finding the deals and working with teams, making things happen, looking at due diligence. So I guess it's a different slant on the same sort of area that I do now.
Yeah, because one thing obviously we haven't spoken about before, and I just thought of now, is when you're actually going out to sort of find business as Fox, how do you guys do that? Have you got sort of social media channels? Do you have BDMs, or what's the sort of structure behind that?
No, David, I'm afraid we're terribly old-fashioned. I think I'm probably a bit too old to learn social media. So our emphasis really is on face-to-face interaction. I mean, we are very lucky to have relationships with a small number of high-quality brokers who kindly share their clients with us. And what we like to do is actually get out on site and meet with somebody and try and discover what it is that they are looking to achieve. And I'm afraid we do leave Twitter and Instagram to others, which I think is a shame, because I think actually our industry would lend itself well to Instagram, given the number of photogenic buildings that we look at. But one of our métiers is to try and be very discreet about who our clients are and what we're working on, so that element of privacy is retained.
Yeah, no, and obviously coming on places like this, that'll help a little bit spread the good word. But yeah, it's an interesting one, because obviously, how big in terms of how many members of staff does Fox have?
Well, Fox is still quite a sort of niche operator. I mean, in the family business overall, there are about 1,000, but that's because there's a large industrial company or set of companies there. In the actual bridge and lending division, there are 6 of us. I mean, it ebbs and flows a bit. So there are really 4 of us who are forward facing, and then we have a back office as well. But I suppose it's true to say that we do run an outsourcing model. So while we don't actually have them on a payroll, we do cause an awful lot of lawyers to be employed and an awful lot of quantity surveyors as well.
Yeah, no, that's interesting. And When it comes to obviously the introductions, you mentioned you've got a few brokers. Is that pretty much the majority of your deal source from brokers, or do you get any direct deals?
We do get a small number of direct deals. It's about 90% comes, about 80% comes through brokers, about 10% comes direct, and about 10% comes through other intermediaries.
Okay, is that like solicitors and surveyors and all of that kind of stuff?
Accountants and the usual sort of professionals. Yeah.
Oh, that's interesting. Now, obviously, we've jumped a little bit ahead there slightly, and would you be able to give us the sort of brief elevator pitch on what Fox does? Obviously, it's bridging and development, but a bit more sort of meat to that.
Sure. Well, we started out lending money to farmers, and we did a number of agricultural loans where we had a good experience. And then we thought, well, actually, maybe we're onto something here. Maybe we can use our balance sheet and our skills in other related markets. And we started doing bridging loans. And then we found over time that the rates on bridging loans became increasingly competitive. And we started moving then into development loans, so lending to property developers. And our loan book is currently about 80% development loans, 5% agricultural, and 15% bridge lending. Now, virtually all of our loans are residential, so about 85% of our loans are either exclusively or predominantly residential, but we do a small amount of commercial developments as well. And I probably should have said at the start that all of our loans are only available for commercial purpose, so we're not lending mortgages on people's own homes.
Yeah, so it's all the unregulated side of things. And it's interesting, obviously, coming from sort of the agricultural side, because that's quite a difficult sort of area to fund. Was that because of your previous experience, or was that just what the business was doing prior to you joining?
I think, to be honest, David, it's just that I grew up on a farm, and so I've always found it easy to talk to farmers, and I've always enjoyed the odd day out in the countryside. So I think it was purely coincidence. I think it probably works commercially as well, because farmers tend to have quite good security in terms of rolling acres.
Yeah, it is an interesting sort of space, definitely. And obviously, then moving into the development side, was there sort of I sort of heard a previous story about how that started. I think would be interesting to share in terms of maybe your first unplanned development.
when we first got into development finance, we were obviously quite nervous because you look at your security and you know something is going to happen to it, and so we started off doing fairly light refurbishments, and we then got into more heavy refurbishments, so refurbishments requiring planning permission and structural work. But we do now actually go the whole way and do ground up as well. And I have to admit, we sort of got into the ground up space, not intentionally at all. We had a developer who bought a house, and we were going to fund him to split it into 3 flats and build an extension. And I do remember it was taking a little bit of time to actually get the project off the ground. And he rang me one day and said, "Oh, we completed the demolition, Patrick." And I said, "Well, how do you mean the demolition? This is a refurbishment." And he said, yes, but we've decided it's going to be much more cost effective to demolish and rebuild. Well, I have to admit, say I had a sort of sense of humour failure would probably be a bit of an understatement. And we very nearly called in the loan, but we decided to stay with it. And I have to admit, I think the developer did make the right call, because clearly in demolishing and rebuilding, he saved himself 20% VAT, but he also ended up with a much better product, one which was much better insulated, and the layouts and flows were obviously better for today's environment. So I think he did us a bit of a favour. We realised that the ground up wasn't quite as hard and difficult as we had assumed. And I would say now that of our development loans, roughly half are ground up developments.
Okay, wow, yeah, and I can imagine that not helping the blood pressure. If somebody did that to us, that's for sure. I'd be a little worried. Because on the development space, obviously, I know Andre, who works with you guys, is great. What sort of experience do you guys have sort of personally in sort of going out and assessing the deals? And one of the key points that you haven't mentioned yet that I know is obviously that in a lot of, or most instances, I think, like evaluation isn't required. You go out and do your own research on the site. How did that come about?
Well, as regards our experience, I guess we're largely homegrown. I mean, I have done a couple of developments myself, and they were sort of okay, but I didn't think it was played fantastically to my skill set. But we have now been at this for 8 years, so we have been out and seen a huge number of sites and evaluated a very large number of projects. We don't do valuations, you're right, David. I mean, I think in the bridge and development lending space, when we set up 8 years ago, we had competitors, but not very many. But there are now a huge number of lenders in this space. And I suppose that leads on to the question of sort of, well, why is it that people come to Fox rather than our competitor down the road? And I think there are two basic reasons for it. One is we can move very, very quickly. And the reason we can move very, very quickly, or one of the reasons, is because we don't use external valuers. So there's no delay of a month while you book in the external valuer and wait for their report. And that obviously helps a great deal. The other reason is that we are funded through a single family. And that means we are in charge of our own credit policy, as opposed to one that is set by our wholesale funder. And that does mean that we can look at many of the opportunities where our competitors, their programs would have a sort of computer says no attitude. And we will look at some of the riskier loans. So that would be relatively inexperienced developers. We often fund those. We can look at funding borrowers with adverse credit history, and we're very comfortable about funding offshore expat borrowers as well.
Okay, brilliant. And what sort of loan to value and rate can people expect at the moment?
Well, inevitably, this has come down quite a lot in the last year. We now get up to about 70% loan to GDV. For bridge loans, we go up to 75% loan to value, and those numbers are much lower. Those numbers are both for residential, and if we're looking at commercial, we'd look to cap it at 55 to 60%.
Okay, and is that 70 and 75 and 60, sort of 55 and 60, is that the gross figure that you'd go up to?
Yes, exactly.
Are most of your deals sort of interest retained or interest rolled up, I guess, on the development side of things? Or do you offer any form of servicing?
Well, we obviously like it if borrowers offer to service, but no, in practice, virtually all of our development loans, we will retain the interest, and so we'll have the interest and capital will all be repaid when the property is sold or refinanced. The one area where we do insist on servicing is if we're lending against an income producing property. So perhaps if we were lending against a block of flats that was fully rented out, we would expect the interest to be serviced from the rent.
Okay, perfect. And you mentioned obviously things have come down, and I'm guessing that in terms of loan to values, that's to do with the current sort of wobbly economic climate. How otherwise has that sort of affected your business?
Well, I think it's not a good time, or I think it's become a much more challenging time for developers and borrowers, because there's no doubt that the rates have gone up by about 2 or 3% per annum in the last year, and lending ratios correspondingly have gone down. I think it's also altered our actual outlook as lenders. A number of our competitors have scaled back on their appetite, and others have been far more reluctant to increase the lending period. And to be honest, this means that we have been very, very busy. We've done a lot of time-sensitive bridges where existing lenders have refused to roll over their facilities, and we're doing a lot more development loans where we are being more selective. I think it's no longer a question of just looking at the kind of pounds per square foot GDV or costs. It's more a question of looking at a scheme and seeing how it will appeal to end buyers, looking at things like distance to shops and public transport, the amount of outside space, and some sort of feature that will put it ahead of the competitors, whether it's green energy, south facing, or great views.
Yeah, because it is. I think that's the key at the moment, is just making sure as things are harder to fund for the end buyer, it is something that will go, and that kind of is leads on to a good point in terms of the actual size of deals that you do. Where are we in terms of sort of rough minimums and maximum?
Well, we can occasionally do very small loans, but we find that our cost structure and means it's not really economic to lend much less than 400,000, and we top out at about 4 million. But we do have a lot of flexibility, and so I think the very smallest ever loan we did was one for 50,000. I'm not sure it was hugely economic, but we had a borrower who was desperate to close the purchase of a property on an advantageous basis. And the largest loan we've done is 5 million.
Okay, wow, that's pretty chunky. And when you just mentioned the advantageous purchase there, do you guys, when you come to doing the bridges, let's say it's a purchase, what's your view on sort of lending against purchase price or sort of open market value? Not that you use valuations, but in terms of someone who came to you and said, look, this is worth 300,000 all day long, or maybe 1 million for your numbers, and I can pick it up for 700,000 because of X, Y, Z. Where do you guys sort of stand on those?
We do get a lot of opportunities are brought to us in that way, David. We're usually fairly skeptical, because to be honest, as lenders, we have to sort of think, well, if something went wrong, we had to enforce and we had to sell this property, while it might be worth in theory £1 million, if the last guy could sell it for was 700,000, that's probably all our security is going to be worth. So I wouldn't say it's impossible, but we tend to think that a purchase price, struck between two independent third parties, that reflects the value of an asset. I guess the one exception that I have seen recently is where somebody was buying the adjoining building, and he was able to buy the adjoining building for what I think was market value, but he explained that it was worth a great deal more to him because he was able to put it together with the building next door, and they were able to create a much stronger scheme. So I think if there was that kind of compelling development or industrial logic, we might look at it that way. But I think otherwise, we will take the purchase price as being what a property is worth as security for us.
Yeah, no, that makes sense. And I guess, would you consider things like option agreements where they've gone and got planning permission, but they agreed the price prior to that? Is that sort of things
Sorry. Okay. Yeah, David, I stand corrected. Clearly, if somebody's bought a property or struck a deal and then obtained planning permission, usually the value goes up very substantially. Yeah. We're happy to look at that.
Yeah, because I guess the one circumstance we see a lot, which is the one that I'm most skeptical of, is we're buying from a receiver for 50% of the actual value. And I was like, well, what do you think would happen if it went wrong? We'd get, our receiver would probably get 50% of what it's actually worth as well. And that's the hardest one, just convince people on, at least some of the brokers. But talking of sort of the odd thing that you've done, have you got any sort of really interesting deals that you've done lately or over the last sort of few years that sort of stand out to give people a little bit of a flavour of the sort of things you do?
Well, we've done well over 100 deals since we sort of set up, and I have to admit, all of them have their own sort of particular foibles, which I found interesting. Recently we funded the conversion of a beautiful listed pub just outside Birmingham into 6 flats, and the developer did do an amazing job in preserving the character of the pubs, and the flats all sold really quickly. But gosh, the council really did not help. There were endless delays in getting planning permission for minor variations, and many of their requirements seemed highly subjective. In total, the local planning authority delayed completion by 12 months, which really did dent the financials. More positively, we funded a recently retired former English international sportsman on his first development. He bought a disused nursing home, and within 6 months, he had gained C3 residential planning permission to split it into 12 houses, and he then sold it. You know, I've never seen anyone make so much money so quickly. Going back to his sporting days, I think what he really managed was to enthuse the entire team to work together as one. And when I say his team, I think that included the planners and the buyer. It was an extraordinary achievement. We've also had a fair number that we've had to turn down, or one that's got away. I do remember one particularly low loan-to-value loan, all going well and into legals, until we discovered the borrower had pulled a replica handgun on a traffic warden some years earlier.
Oh, wow.
And we thought, gosh, if that's how he chooses to negotiate with traffic wardens, we probably don't want to negotiate any further with him.
Yeah, when the receiver's coming, it'd be that'd be an interesting sort of standoff. But yeah, that's the joys of lending, isn't it? And
I think it's a sheer variety, of properties and personalities that we deal with.
Yeah, it must do. And obviously, if you guys are going out to meet everybody, is there any particular reason that you do that as opposed to the valuations? As I know we've kind of touched on it previously, but with the valuations, you get the cover of their PI insurance in case there's a mistake somewhere. Is that something you guys are conscious of?
Well, I have to admit, we quite often see other people's valuations, and they're usually immaculate in terms of describing the asset and very, very helpful there. But I think sometimes what a property is worth can be a lot more subjective. And the idea is that by doing our own internal valuations, we have to think about it a lot harder. And there is a huge, nowadays there is a huge amount of public information on what properties sell for. And so we have to data mine through all of that. And it does make us really think about not just what the property is worth in theory, but actually how liquid the property is likely to be, how quickly, if we had to take enforcement action, how quickly we might be able to convert security into cash.
Yeah, no, I think it's a good idea. And you mentioned you often see other valuations. Does that mean quite a lot of your sort of borrowers have gone to alternative lenders initially and maybe had it turned down where they literally was a computer says no situation, and then they come to you, or do they, how does that work?
I think it means two things. I think it means that quite a lot of our borrowers are refinancing, and so quite often the valuations that we see are a year or two old, but they still contain a good description of the asset. And then yes, I think it means that quite a number of our borrowers have gone along to high street banks and tried to borrow money at, to be honest, much cheaper rates than we as an alternative lender are able to offer. They've been turned down, and so then they come to us to get the more personal service that we can offer.
Yeah, no, I think, because we get that a lot from our own lending as well, but it is, it's not always first choice, because, you've got to look after go for the lowest rate first, but it isn't always about that. And I'm sure you'll agree in terms of, from the sounds of it, a lot of your business people will come to you because of that flexibility and the ability to take a view and really dig into the deal, as opposed to a tick box exercise.
Well, I think that's right. I think we need to remember that it is a hugely competitive market, and there is nearly always some other lender who will be offering a deal that's a few bips lower.
Yeah.
But I think what developers and borrowers need to consider really is the quality and the speed of the service and the certainty. And in my view, borrowers are often best served by paying a little bit more to have that absolute certainty of funding and to having it a little bit sooner.
Yeah, no, I agree. And it is a case of actually doing the deal sometimes. You know, you might pay a little bit more, but you could waste months and months with a lender that is looking for just you know, to save you 0.1, 0.2, and it's in the end you would have been a lot better. You'd be halfway through the build by then. Do you have any sort of particular advice for sort of brokers in particular that would be actually sort of offering up deals to you that to make things that they should look at that maybe sort of brokers don't deal with development finance that often?
Well, I mean, I think there are a couple of pointers. I mean, one of the things that we place great emphasis on is goal alignment between the lender and the borrower. And the way we achieve that is by making sure that the borrower is fully committed to the project. So we make sure, you know, that there's a good amount of equity in the project, because we take the view that if the borrower is not prepared to put in a fair amount of money, then why should we? And I think that's really important in structuring a product. And I think otherwise, early engagement is always a good idea, because I guess what some brokers do is they spend a lot of time sort of structuring the loan and then find that they struggle to gain the finance. And if they do bring in a lender early on, you know, we're very happy to review the business proposal, tell you what we think of it, you know, and even if, you know, it ends up being funded by somebody else, that's fine. We'll still happily, you know, give you our initial thoughts on it, and that then gives you the opportunity to perhaps repackage it, you know, in the best possible manner, in the manner that's most likely to result in getting funding at a reasonable rate.
Yeah, because it is a difficult one, because I think there's a huge discrepancy in sort of broken knowledge, especially on developments. Bridging finance are obviously a lot more sort of straightforward. And when it comes to kind of getting that, because how much information do you expect to be provided, as opposed to that you will sort of go out and find yourself? So if somebody came to you and said, essentially, here's the name of the borrower, the purchase price, the GDV, and the build costs, would that be enough? And the address? Or sort of how much more initially, just to give a rough figure of yay or nay?
I think generally speaking, more is more. But actually, Dave, what you've outlined is the guts of what we need, because with the postcode, we can always pull up the planning and look at the drawings. And if we have an idea of the square footage, we can pretty soon get an idea as to whether the GDVs sound about right, and whether the build cost seems realistic. And I suppose at the moment, it's perhaps the build costs that are most troubling of all. It's been well reported in the press that build costs have gone up. And sometimes people with, you know, more long-standing proposals haven't fully reflected that reality.
Yeah, because that is a big, a serious sort of issue at the moment, that we're seeing a lot of the developers we work with as well, really struggling to keep those costs down. And obviously every penny eats into their profit, and with the interest, it's some of the deals just aren't tenable, which is, I guess, why we stick to the, and you stick to the sort of loan to value you do. I'm conscious of the time, and I don't want to keep you forever. So is there any kind of other information or anything else that you'd like to share with the listeners today?
We're not really, David, other than to say, you know, there's been a lot in the press about the rain clouds that are gathering over the industry because values are falling and costs are increasing. And I just think, in amongst all that gloom, we do need to remember what actually underpins the residential developments in the UK, and that is that we've got a huge housing shortage. And I've, you know, certainly been pleased to play my own sort of small part in helping to solve it over the last few years. And I think, you know, that will continue to take us through in the medium and longer term to this being a good industry to be involved with.
Yeah, no, I agree 100%. And we definitely need a lot more houses. So hopefully, if any brokers are looking for development finance, do get in touch. And where can they find you? What's the best way for them to get in touch with either you or Fox directly?
The best way, I think, really is through our website, which is www.foxfunding, all one word, .co.uk.
Perfect. That's pretty brilliant. And what I'll do is I'll make sure that's linked in the description. So if anyone does want to have a get in touch with Fox or have a look at the website, just go ahead, let us know, obviously, if you do, and then hopefully you can get that sorted. But otherwise, I think that is everything for today. I don't want to keep you forever. So thanks so much, Patrick, for your time. Really appreciate it. And hopefully, obviously, we'll have to get you back on in at some point later in the year to see how things have changed, and we'll go from there.
Thank you so much, David. Some very probing questions there.